Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at a fast-growing company who has seen a major drop in share price over the past few months, and now would be an excellent opportunity to buy the dip. This company is a leader in their respective industry with a lot of room to grow over the next 5 to 10 years. And the stock we're going to focus on in today's video is ticker SPOT, which is Spotify. They trade for $253 per share, and they're only up by 6% on the 1-year chart. This company is a leader in the audio, podcast, and music industry, and they continue to grow their user base quarter after quarter. And right now they're trading with a market cap just over $47 billion. And in this episode, we're going to take a look at the company's most recent headlines, including their latest acquisition, their new product launches, the new contracts they've signed with some major podcasts, some future growth projections from analysts, and the company's underlying financials to all help us determine if now is an excellent opportunity to buy the dip on Spotify stock. So we can see right now they're trading for $253 per share. And if we take a look at the 6-month chart, from a high point back in the middle of February 2020 of $364 per share, the company is now down by 30%. They've lost $110 per share value to get down to the $253 level, and now might be an excellent opportunity to buy the dip. But before we take a look at Spotify in detail, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and of course today we're going to focus on the leader in the streaming, music, and podcast industry, and that is Spotify. And of course lately, the company has made some major deals, and they have recently announced the acquisition of a company named Pods. They work directly within the podcast industry, and this new buy will help the company directly compete with Apple in the heated audio space. And Pods is a podcast discovery service that enables the content creator to better promote their show using audio clips selected through a special algorithm. So now that Spotify has picked up this company, this will be exclusive to the podcast on the Spotify platform and help those ones grow and reach a greater audience, promote their shows, and of course attract more users to Spotify as a whole. And going forward, the company's put an increased focus on growing their podcast network, and they now have over 2.6 million shows published on the Spotify network, which is absolutely phenomenal. And right now, currently content creators looking to promote their podcast typically do it through sound bites to share on social media and other platforms. And the existing tools on the market require the individual podcaster to go in and manually select each audio snippet and then share it on social media. But with Pods, this entire process is completely automated through their special algorithm that uses machine learning and over 100,000 hours of audio consultation to go through the full-length show, pick out the best clips that they believe are going to resonate with the potential audience, snip them down, and actually have them available to share on social media without the individual podcaster having to do any work. And going forward, this will make it very easy for the overall Spotify platform to take automated snippets from each individual full-length podcast in order to promote the shows internally and externally to gain a greater audience, which benefits not only the individual content creator, but the platform as a whole. And overall, I think this was a great acquisition for Spotify. The company has a very clear goal of improving their podcast network and services, and having this new discovery feature already integrated with the 2.6 million shows on the platform will really help them grow and compete with Apple at a large scale. So this was the first major headline coming from the company that I think is really positive and could lead to some long-term growth in users and shows over the next 3 to 5 years. The second is that the company is now competing in the live audio space with their very new app called Spotify Green Room. This, of course, helped challenge the growth of Clubhouse, which is a new viral app that promotes live audio services and is now worth over $4 billion. So the company has just announced a new platform to directly compete in that same industry, hosting live audio shows across various different industries. And the company did that by enhancing a recent acquisition of a platform called Locker Room. This was originally a live audio sports app, but the company bought them out, added it to the Spotify umbrella, and now altered it into create Spotify Green Room, which is more than just sports. Initially, the product they bought was a sports-based app. Now it's a general app similar to the initial Spotify that allows different live audio platform and speakers to go on, share their thoughts, and speak directly to a live audience. So I think going forward, live audio is going to make a comeback. People are joking that the radio was the first ever live audio, and I have to agree. But now I think the overall social media game is changing, and going in live audio is going to be a great way to connect to your platform and your audience. And the fact that Spotify is now entering into this industry is a great sign, and I think it will be very lucrative over the longer term as well. So I like to see this company is coming out with a new app, Spotify Green Room, to directly attack this market, which is a great sign. And the third major headline that I think is really beneficial to the company long term is the signing of the Call Her Daddy podcast. This is one of the most popular podcasts for the younger generation for both men and women. And right now, Call Her Daddy, or the host, Alex Cooper, is a social media star. So originally, this podcast was under the Barstool Sports umbrella, but after the contract with Barstool was ended, Alex has shifted exclusively to Spotify, and she will be bringing her cult-like following with her. And I truly believe that Spotify will gain millions of new eyes on the platform, and every Call Her Daddy fan that has not used Spotify yet will make a new account and transition over to that platform because of their loyalty to Alex Cooper and the show that she puts out every single week. Her quality is incredible, her fans are extremely loyal, and I think this was a great deal by Spotify to lock up this dominant player within the current market environment and a leader in the podcast industry with record-breaking numbers. So overall, these three major news headlines are really positive for Spotify and can really help the company grow over the next few years. And another thing that I want to point out is that Ark Invest, a company focused on buying disruptive innovators or the brands that are going to change the world in their specific industry, has been loading up on Spotify stock throughout 2021. We can see the purple line indicates the amount of shares owned by the company, and as Spotify's share price continues to fall, Ark Invest is buying more and more shares, and in total, they own more than 4.2 million at this current point in time. And right now, Ark Invest is a major shareholder in this company, owning more than 2.1% of the entire Spotify platform, and is the 11th largest holding in the entire Ark Invest umbrella, which is absolutely massive because this company owns tens of billions of dollars worth of stock on the public markets. So Ark Invest must see a ton of potential in this platform going forward, or they would not be so heavily invested into the audio, streaming, and music industry through Spotify right now. And if we take a look at the company's Q1 2021 results, they've been performing very well. Total revenue in the quarter grew 16% year over year. They were able to grow their monthly active users, and overall, the company started out this calendar year with some very strong numbers. Total monthly active users came in at 356 million, and their premium subscribers grew 21% year over year to 158 million people, which is a very solid number. And their total revenue in the quarter came in at $2.147 billion, growing 16% year over year. And if we take a look, their monthly active users was up 24%. So that means year after year, quarter after quarter, the company's attracting more users to their platform. And if we take a look at where they're located all around the world, we can see that Spotify is not solely reliant on one geographical region for a majority of their user base. 24% from North America, 34% from Europe, Latin America makes up 22%, and the rest of the world makes up the remaining 20%. So it's a very strong sign. Many companies are solely focused and have a majority of their customers from one single region, whether it be North America or Europe, but not usually both. And we can see with Spotify, nice globally diversified company getting users from all around the world. And if we take a look at their premium subscribers, so the people paying a monthly fee for ad-free listening, 29% from North America, 40% from Europe, 11% rest of the world, and 20% Latin America. And what I like to see here is that North America making up only 29% of their total premium subscribers means there's a ton of room to grow in this market. Within the United States and Canada alone, there's tens of millions of new customers that Spotify can attract to bring in huge amounts of revenue for the business over the long term. And now if we take a look at the company's income statement, we can see that year after year, total revenue is growing. Back in 2016, they had $3.1 billion of total sales, and that has grown year after year to over $9.6 billion in 2020. And the company is not profitable just yet. They are posting some major net losses, but analysts are forecasting that over the next 3 to 5 years, the company will achieve positive net income, which will be a very good sign. And going forward, if we take a look at some analyst predictions for the next 2 years, they're forecasting total revenue growth in 2021 of 20% to 11.17 billion. And then for 2022, they're forecasting total sales to reach 13.44, representing another 20% increase over the 2021 number. So over the next 2 years, we're forecasting 20% annual revenue growth, which would be a very good sign for this business. And taking a look at the bottom line, we're expecting a major explosion in terms of total earnings, annual expansion of over 137% per year for the next 5 years going forward. And at this current level, the stock is rated as a 2.5, meaning it's considered a light buy or a very weak hold. And currently, the $253 share price is well below the 12-month expectation of $317 per share, implying another 25 to 30% upside from its current level right now. So Spotify is definitely a very interesting company. And if you're looking to add a growth player in the live audio and streaming services, Spotify is definitely the brand to take a look at. They're the current market leader in that industry, and going forward, I don't see any other competitors completely knocking Spotify out of that independent market leadership position. So right now the stock has fallen 30% from their highs. They're a growth company projected to expand revenue and earnings for the next 5 years going forward, and definitely worth taking a look at on their major dip as of late. So let me know down in the comments if you like the company, if you already own some shares, if you're planning to buy the dip, or your overall consensus on Spotify stock at this current point in time. I love having conversations down below, so drop your thoughts. Please hit that like button if you already haven't done so, subscribe and join the community, and I will see you in tomorrow's video.